Hello traders, welcome to our new video. Today we'll dive into one of the most overlooked yet crucial aspects of trading psychology. My name's Sam and today we will try to dive deeper into understanding the market's psychology. But before we jump in, we'd love to hear from you. Share your thoughts and questions in the comments down below. Make sure to watch until the end for all the essential insights. So now, grab your coffee, sit back and let's get into it. Trading psychology is all about how your mindset and emotions influence your trading decisions. It's what differentiates a successful trader from a struggling one. You might have the best strategy, but if your psychology isn't in check, even the best trades can turn into losses. Imagine you've developed a solid trading strategy through rigorous backtesting, but when it's time to execute, fear and greed start to whisper in your ear. Fear tells you, what if the trade goes against me? While greed urges, maybe I should hold out a bit longer for more profit. These emotional influences can derail even the most well thought out plan. Let's talk about some common psychological pitfalls that traders face. These are the silent saboteurs that can wreak havoc on your trading account. Number 1, overtrading. Picture this. You've had a winning streak and the adrenaline is pumping. You feel invincible, so you start making trades left and right without proper analysis. This is overtrading. It's driven by a desire to catch every opportunity, but often leads to significant losses. Always remember, quality over quantity. 2, fear of missing out. FOMO. Have you ever jumped into a trade just because everyone else seems to be profiting, only to watch the price plummet right after you buy? That's FOMO. It's the irrational fear that you'll miss out on potential gains if you don't act immediately. To combat this, stick to your trading plan and ignore the noise. 3, revenge trading. After a losing trade, you feel the urge to win back what you lost, and fast. This is known as revenge trading. It's emotionally driven and rarely ends well. Instead, take a step back, review what went wrong, and approach your next trade with a clear mind. Now that we've identified the pitfalls, how do we tackle them? Here are some strategies to help you master your trading psychology. 1, develop a trading plan. Think of your trading plan as your compass. It should outline your entry and exit strategies, risk management rules, and criteria for evaluating trades. Having a plan helps you stay grounded and reduces impulsive decisions. 2, set realistic goals. Instead of aiming to double your account overnight, set achievable and measurable goals. Focus on consistency rather than big wins. For example, aim for a certain percentage return each month rather than trying to hit a home run every time. 3, embrace losses as learning opportunities. No trader wins 100% of the time. Losses are part of the game. The key is to analyze our losing trades to understand what went wrong and how to improve. Every loss is a stepping stone to becoming a better trader. 4, practice mindfulness. Before you trade, take a few moments to clear your mind. Stress and anxiety can cloud your judgment. Techniques like deep breathing or meditation can help you stay calm and focused, especially during high-pressure situations. Let's bring this to life with an example. Suppose you've spotted a potential breakout in a stock. You entered the trade with a plan to sell if it rises to 5%. But as that price moves up, you start thinking, well, what if it goes up to 10%? Maybe I should hold on a bit longer. This is greed talking. Stick to your plan and take the profit at 5% as per your initial analysis. Deviating from your plan can lead to unnecessary risks and losses. Another example, you enter a trade and it starts moving against you. Panic sets in and you exit at a loss. Moments later, the price reverses and hits your initial target. Here, fear caused you to exit prematurely. If you had a well-defined stop loss and trusted your analysis, you might have avoided the premature exit. Are you ready to take control of your trading psychology and transform your trading game? Start by crafting a solid trading plan today. But before you do that, please make sure to understand that trading is risky. You'll want to use all the tools provided and do your own research for the assets you decide to invest in. Remember, self-awareness is your superpower in the market. Mastering trading psychology is a journey, not a destination. Don't forget to subscribe to our channel for more insights and tips. Hit the notification bell so you never miss an update. Share your experience with trading psychology in the comments below. We'd love to hear from you. And if you found this video helpful, give us a thumbs up. Thanks for sticking around. Check out these other 2 videos. We think you'd love them too. And remember, keep learning and trade smart. Until next time, happy trading.